Good morning. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Akil, the top headlines of this hour. Positive start to the trade in Indian markets, benchmarks, broader markets, trade in line, India VIX declines. In Berger Paints and Bajaj Auto surge in open interest as traders take fresh positions in their futures. US imposes the first round of tariffs on Chinese imports, prompting the Asian nation to say it's left with no option but to retaliate. And the auto component maker Varroc Engineering makes its debut on the bourses today. Reliance Industries is looking to shake up the fixed broadband and D2H markets with the launch of Geo Gigafiber. How does it impact the existing players in the broadband and D2H space? Let's ask S.N. Sharma, Chief Executive Officer at DEN Networks. Mr. Sharma, good morning and thank you so much for joining us. I'm sure you have heard all that's come out of the Reliance Industries AGM. Can you tell us a little more about how this can change things around for the D2H business?
Yeah, good morning to everybody. We being cable players, we have been hearing this and gearing up to match up with the upcoming entry of telcos into broadband business. Now, it's a welcome development as far as DEN is concerned. This shows the potential in the sector. Entry of a large telco of this size into this sector means lot of developments, lot of high rate penetration across the country, and that will also unlock the demand. The demand of fixed line broadband was so low. As of now, you have just 6% penetration, whereas any developing country or developed countries have close to 60 to 70% penetration as far as fixed line broadband is concerned. So that means a lot of attention and attraction in the business, in the space. Now, when it comes to a large telco, definitely they have the resource and might. But India is a huge market size, and that has space for many players. And as I said, still a lot of time will be needed for them to extend the wires in the last mile. Whereas players like DEN already have their cable and fiber infrastructure in place, serving the subscriber with digital video services. So we are confident that we will be also doing justice to our business. In fact, just to update everybody, right. DEN has also launched a 100 city.
I take your point that the fixed line broadband in India, that market is pretty much under-penetrated and there's a lot of opportunity, hence the reason why we're seeing Reliance also foraying into it. But tell us, how does this impact the incumbent players like you, DEN Networks? We've seen some bit of pressure also coming when it comes to the stock price since yesterday after this announcement has come in. How are you looking to sustain or rather increase your market share at a time when you know there's going to be a new entrant in the market?
Yeah, definitely the news was in the air. The only difference is now that there is a formal announcement and the timelines are also drawn. So DEN had already taken an initiative. Just 2 months back, we had also announced to 100 cities broadband rollout plan with low capex model and with a ARPU in the range of 500 rupees only. So as far as DEN is concerned, we are confident of moving ahead and doing the justice to our business, irrespective of the stock, what all is being talked or what all is happening in that market. That's a different story. But as far as execution is concerned, we are on the right path and we are confident. Definitely, this brings a lot of strength. You see, any player that enters, and especially if it is a disruptive model, that brings a lot of strength to existing players who are confident and who are positive about their business model. So that means a lot of technology will be brought in, a lot of new initiatives have to be taken. Eventually, it is the fittest to survive. We are operating in an open economy, and with that perspective in mind, we are taking all the initiatives to ensure that we don't fizzle out in the whole bargain.
All right, so Saloni here. I just have one question for you. Analysts are believing that the new fiber broadband service by Reliance is likely to impact the cable TV subscriber base as well. So how do you plan to retain your customer base, and what is your first take on it, sir?
Yes, just to update you, even the existing MSOs and their fellow cable partners, we have 15,000 cable partners. I am happy to share with you 90% of our network is all fiberized. Over a period of time, the networks have transformed from coax to fiber optic network. So as far as 10 is concerned, our fiber, including our cable partners' fiber, is just 50 meters away from any homes. So video business has no threat as far as entry of a telco is concerned. Definitely, there will be stress on broadband business. That too, primarily to begin with, the stress will be primarily in the main metros or the top 10 cities of the town of the country, wherein we are already visualizing the ARPUs that used to be in the range of 900 rupees around 2 years back have fallen to 600 rupees. Looking at the whole perspective, we have confidently drawn out a business plan wherein we'll be rolling out 100 cities. Not in these 100 cities are not covering these 10 cities. We are consciously keeping away so that we don't burn the capital over here and end up going through the tariff war. It's a low capex based model. We'll be rolling it out in rest of the country. The demand is same. Demand is more over there since there is hardly any service provider. As I said, it's just 6% of the country that has wireline broadband. So a lot of scope is there to do the business.
All right, Mr. Sharma, we'll leave it at that note. Thanks a lot for joining us today and taking us through those details as to how Reliance Industries foraying into fixed-line broadband could impact the incumbent players like DEN Networks. Let's see. But the stocks definitely have taken a beating since the announcement yesterday. Besides DEN, you also have stocks like Hathway, City. All of them have taken a beating. And we also spoke to the management of Dish yesterday, but they've clearly stated because they get their revenues, majority of it, I guess, 60-65% from rural markets, so they may not get impacted so much. In fact, Dish TV currently is sitting almost at the day's high. But let's switch focus back to the F&O market and let's tell you what's happening in the futures and options space. Markets today are looking pretty much stable. Let's just pull up the Nifty rates and also with the Nifty future rates. Right now, all the benchmark indices, at least Nifty, Sensex, Bank Nifty, are trading in the positive territory. The futures yesterday, which did not do much in trade, and the premium has just been somewhere about 1 to 2 points, currently are trading with a discount of almost closer to 1 rupee. But looking at Bank Nifty, which had a weekly options expiry day, that's also back above the mark of 26,500. So that's one good news. But the futures are still trading with a discount of almost 20 to 22 points. I also want to pull up the India Volatility Index and check what's happening with the volatility today. So not much. 12.5 is a pretty much comfortable level. Quickly, let's tell you what's happening on the option side as well and what sort of range one can expect, at least for today's session. Let me tell you, 10,700 is a very, very key important level to watch out for, because I think that's where your 50-day moving average also is somewhere. So watch out for that one. But as of now, that's the open interest change. There's been some put writing on the 10,700 strike. The red bars are your put strike. 10,800 and the 10,900 call strike so far have seen some bit of OI addition. In terms of FIs, surprisingly, the sell figure on the cash side yesterday came off. So it was only about 159 crores. We've been looking at a figure of 1,500, 600 in the last few trading sessions, and they also unwound their short positions on index futures, as you can see, and added some bit of long contracts. But considering it was the day of the expiry for Bank Nifty, we did see on the index option side there was a lot of unwinding which took place across the board.
Well, Navneet, I'm just going to talk about two stocks right now. First of all is Berger Paints. We have seen it advance as much as 2% in today's day of trade. More strength coming in for Berger Paints, and we've seen a rise around nearly 30% addition in open interest. Its volumes have also surged quite substantially. And the second one is Bajaj Auto. We have seen further strength come through, and well, it's well above the mark of 3,000 rupees per share, and an open interest increase of around 7.5%. Both seeing fresh longs in today's day of trade, Navneet.
Okay, we'll keep an eye on all these stocks and get you some views also from our experts. But before we get our guest on the show, here's a reminder. If you have any queries in the futures and options market, please call us now on 022-4540-4141. You can also write to us on Twitter or Facebook. For the ones who are watching our show on YouTube, you can write your queries there as well. All right, let's welcome our F&O experts then. Navneet Daga of IIFL Wealth and Ashish Chaturmurthy of Sanctum Wealth are here with us. Good morning to both of you gentlemen, and appreciate you joining us today on Bloomberg Quinn. Ashish, let me come to you first. Any fresh trades that you're taking on Nifty or on Bank Nifty?
Good morning, Navneet. So yes, I think after a long time there is some amount of visible strength at an index level. Although still it has not crossed that previous resistance mark of 10,840, 850 levels. But at least by one can get a sense by the index contributors and the advanced decline which we are having in the market that there's a likelihood that this time we might cross that resistance zone. So I think option traders can definitely look for initiating a long in 10,800 call option, and rather than having a stop loss at an option level, what I would recommend is keep 10,730 as a stop loss level. So if 10,730 level gets broken down on downside, then I think one should look for exiting this 10,800 call option, and I believe that around 10,850, 10,900 zone one can look for booking some gains in this call option of 10,800 strike price.
Fair enough. So, Ashish is playing on the upside, looking at levels of well over 10,800, and that the 10,800 call is what he's recommending. But Navneet, Daga has a short strangle strategy. So first, let's take a look at what a short strangle means. A short strangle is employed when one sells an out-of-the-money call and an out-of-the-money put in anticipation of decrease in volatility, and the strategy becomes profitable when volatility decreases, followed by contraction option premiums. Contraction and option premiums being key in this case. Navneet, can you take us through your strategy in this case, and what strikes are you playing this short strangle on?
Hi, good morning, Anand. Look, we have been playing the range-bound market for quite long now, and it's been working out well for us. And it was almost fifth weekly expiry for the Bank Nifty, which hovered near 26,500 levels, of consecutive fifth weekly expiry. So I'll say that within that 1% band, we have been able to hang on for the last almost 5 weeks or so. And there is no clue to me whereby it's looking likely the shackles will be out either on the upside or on the downside. So when the wicks are trading at almost 12.5 odd levels and the implied walls near to that 11 odd mark on the index, you don't expect major green shoot on the long short trading working for you on at least on the index side. There would be a lot of sector churning happening, but on the index side, it's looking like it's still the range bound action because the kind of opponent is built up that I can see in both the sides. It's looking to be that the traders are playing that same game. Selling in 10,600 put options on the lower side and simultaneously selling in 10,900 call options on the higher side would make sense to me. We're getting in almost 116 to 120 points in that particular strategy as an inflow. To my understanding, if I keep a strict stop loss on the spreads widens towards 180 odd levels, so one should look to exit it. And my target on this strategy would be almost 40 odd points, looking at the theta decay as well as vega decay for the going series.
Okay, that's a short strangle strategy being advised by Navneet, but let's also tell you some strategies going on individual stock futures for the day. Ashish, let me come to you first. What are you recommending in trade when it comes to the stock futures?
Yeah, so I think within the auto basket, Maruti and Mahindra is our top pick. Within that, Mahindra is offering a good risk reward at this juncture. With a stop around 885, this could be initiated as a buy idea. On the upside, 940, 950 is what I'm expecting in Mahindra in next couple of few trading sessions. My second bet would be on Exide Industries, again a major consolidation and then a fresh breakout on daily, weekly chart frame. So I think Exide could be initiated as a buy idea with a stop below 260, and upside 274, 275 is what I'm expecting in Exide Industries. Balkrishna Industries is one stock, after consolidating for a while, has seen almost 7% open interest addition in today's trading session, a good breakout on daily, weekly chart frame. So with a stop below 1150, I think Balkrishna Industries could be looked for an upside target of 1220 zone.
Okay, so two ideas coming in from Ashish. Navneet, how about you? What are you recommending today's your trade?
Look, my first trade would be on Yes Bank, which is my re-trade call. The last time we spoke, that the stock was trading around 330 to 335 range, and my initial target was 345. That has been met, and it is crossed above that and comfortably sitting above that level. So I'll still believe that the momentum, if this stock has started to pick up momentum on the higher side, and there's a chances that it might move towards that the higher band of 370 odd zone. So to my understanding, one can still look to be on the long side at current market price of 352 to 354 zone, and stop loss on the lower side now should be trailed towards 344, and looking at the target of 370 in the coming week or so. The second stock would be on the short side, because it's a two-way market and there are a lot of sector churning happening within that sideways range in the index. So to my understanding, mid-cap IT is giving me some signs of tiring out on the higher side, and there's a chances that it might break on the lower side. And we are seeing some kind of an open interest build-up, as well as some kind of a pattern in the charts which is suggesting that the tiredness will come in, and the stock might lose momentum on the higher side. So KPIT looks to be a good short to me. It's looking like the 369 to 370 zone is a good entry price on that stock and the short side on July futures, with a stop loss on the higher side of 279 and looking at a target of 251 on the lower side.
Okay, those are a couple of individual stock ideas going for the day, but I'm going to quickly go and take some viewer queries which we've already received on Facebook. Monish Bhatia has sent us a query, and he wants to know what to do with Indigo. He's bought 1150 call, for which he's paid a premium of almost 16 rupees, and I think the current premium on that 1150 call strike is just about the same, around that level. Ashish, let me come to you. What would you advise Monish to do? It's just at the money right now. Do you think he should hold on to his position?
Sorry, Navneet, which stock?
Indigo Aviation.
Indigo, okay. So as far as Indigo is concerned, it's a stock which has seen a very sharp correction, and again, if you look at last 3 trading sessions, although there is some recovery, but with very low volume participation, and even at current levels we are not observing any major OI build-up. So I don't think any major action is going to happen in Indigo. It might remain flat at current levels, so it's better to exit out of these long positions in Indigo.
Okay, well, it's interesting that Navneet has, put a sell call on KPIT Technologies, because the other stock which has been moving in tandem with KPIT Tech is NIT Technologies. Can we pull up the futures and address what's happening with these? There's been a little bit of decline there as well. The underlying, of course, at this point in time is showing a decline of around nearly 1%. Open interest once again has surged, and there has been some weakness coming about for this one over the past, couple of days. Navneet, would you agree with the idea that NIT Tech can also see the same amount of profit taking and perhaps some more weakness that you are indicating when it comes to KPIT Tech as well?
Yes, look, Agam, we have discussed this idea a number of times on the show, the largely on NIT Tech, and it's looking like now there's a formation which is making me believe that on the high side, at least the immediate resistance are in place, 1150 to 1160 odd range. It has not been able to cross above that. It is giving you signs that these stocks are tiring out, they're not participating even in the uptrending market, even the markets when the markets are uptrending. So it's giving me feelings that some kind of distribution is happening on the high side, and we might see some on the lower side, we might see some lower levels on the NIT Tech as well. So I'm looking at, if somebody is tactical trader, one can look for shorting NIT Tech as well at the current market price. I'm looking at a stop loss of 1120 on the higher side, and looking likely that this might track down towards 1050 odd zone.
That's the view on these IT stocks. Before I go across to the next query, Adani Power and Adani Enterprises, both these stocks have surged in trade. If you could just pull up the charts of both. Remember, a few days back there was news that Adani Group is looking to raise some money by issuing shares and also selling some stake in Adani Ports, which we've already seen in the past. Some stake has been sold to deleverage its power business. And Adani Power is the one which has gone up almost 7 to 8% in trade. We'll keep an eye on all these stocks, but on YouTube, Debu Jyoti Banerjee wants a view on TCS 2000 July call strike. So he's not mentioned actually if he's taken any position on that one. Ashish, if I could come to you, I think it's just turning at the money now. 1892 is the underlying. So would you suggest somebody to buy the 2000 call at current premium?
See, TCS is continuously, in a very strong uptrend, and today also there is some long build-up happening. Trend is quite strong, but if you look at the risk reward, it's not that favorable. But still, yes, I think till the stock doesn't break it 1870 on downside, yes, there is a possibility of stock hitting 1950, 1970 zone, and the best way to play this strategy would be initiating a long in 1950 or a 2000 call option. So yes, he can take this bet, but I think on downside 1870 should be kept as a very, very strict stop loss, and if these levels are broken, then it's better to exit the long position in call options as well.
Okay, let's also put up Hexaware, since we are on the topic of IT companies. Our next query is from Girish Kumar, and he has sold the 450 calls of Hexaware, and he's of course paid a premium of 13 as per the suggestions in the query right now. It's currently at around 448. But let's take this on with Navneet. Navneet, firstly, how liquid are options in some of these relatively smaller names? The second part of the question would be, would you advise dabbling with options in such names? And third, what would you advise Girish Kumar to do, considering he has already sold the 450 call on Hexaware at around the mark of 13?
Look, first of all, there is a lot of liquidity issues in this mid-cap IT names in terms of options. I'm looking at even Hexaware at the money options, which are not that liquid in terms of a total volume traded in it would be in the number of lots, in 10 to 15 lots. So for the day, it's still it's looking likely that these are not very liquid one, and one should not venture directly into the options in these counters. These have been very volatile of late, as well as I'm not seeing any major liquidity out there. So the exit would be quite difficult in that case, since the gentleman has already sold the options. I'll say that on a closing basis, one should keep monitor the levels of 452 odd. If it started close near 450 to 452 zone on the higher side, one should not carry on the position, because I'm not seeing that kind of a weakness in this counter in the way we are seeing the others one, because it would be difficult to exit in that case after that. So once it becomes in the money, deep in the money. So to my understanding, on the future side, one monitor levels of 452 on the higher side. If it started to close above that, one should look to exit in that.
Okay, and so there you have it. That's the view on Hexaware options specifically in this case. Girish Kumar has also bought the Yes Bank 350 call at around 10.35. Let's also take a look at where these Yes Bank options, as well as the futures for that matter, are currently trading. This particular Yes Bank call, the 350 call, is at around 13.35. So Girish is making some amount of profit at this point in time, should he choose to liquidate his position. And can we take a look at the futures and see where okay, so the underlying is at around 354. Ashish, would you suggest that he should, liquidate his position, square off his position, or do you think that he can carry on with his call option that he's bought on the 350 call?
Sorry, which stock?
It's Yes Bank, Ashish. It's currently...
Okay, Yes Bank, Yes Bank is looking quite promising. In fact, I think stock has a potential to see a strong upside towards 370, 380 zone. After a long time, this kind of, price volume breakout has happened. We have seen a considerable amount of open interest in last couple of trading sessions. So I think if he's, sorry, I didn't hear that whether he's on the long or short of this call option. But definitely if he's on the long side, he should continue this call option. But if he's on the short side, it's better to exit any short or short call or put options in Yes Bank.
Okay, Yes Bank, remember, was the top gainer on Nifty yesterday. It's also seeing some bit of buying coming back in today's session as well. Let's just pull up the chart of Ashok Leyland. That stock's gone up on very high volumes in today's trading session. In fact, it's already done more volumes than what we saw for the entire day, at least yesterday. So almost 1.3 crore shares have been traded here, 5% higher for Ashok Leyland. Ashish, if I could come back to you on the charts, 5% higher. Is it indicating any sort of fresh breakout?
It's not a breakout, Navneet, but yes, one thing is there that since the stock has seen a very sharp correction from 170 odd levels to 120 zone, and there's a lot of buying interest in this name post the kind of numbers we have seen in most of the auto basket. So I think there's a lot of buying interest from fund houses, PMSs, and that's why I think there can be a lot of value based buying which might start happening. As far as technical indicators are concerned, I think it has taken support from a reasonable strong support zone which was around 122, and now has given a fresh breakout in a very short term time frame above 125. So ideally 125 should be kept as a positional stop loss in Ashok Leyland, and if these levels are not broken, we can expect the trend to continue towards 136 137 zone.
Okay, so that's the view on Ashok Leyland, and with that I'm going to thank both our experts, Ashish as well as Navneet, for joining us and taking us through their views. With that, it's a wrap on this edition of the F&O Show, but lots more lined up, so stay tuned in the Bloomberg.